Good morning, ladies and gentlemen. We're going to look at some stocks that are optionable. So we're just going to come over here, and I think it's option or short any. Optionable. There you go. Stocks. Looks like we have 419 on the total ticker area here. Right there. Click that. Looking for something on the New York Stock Exchange. That's NYSE. I think we're going to change that to NASDAQ. Let's see what we got on there. All right, cool. Smaller number. These are all the stocks that are under NASDAQ. So, price, we want something that's about under $20. Okay. So we have 7 tickers. American Airlines, Huntington, Host, Hotels, Open Doors, Sirius, SoFi. I shorted the shit out of SoFi and placed a call option. That one was I posted a video on my other Facebook. It was a $2,000 profit I had on there. Okay, if it's Sophie Technologies, that's that application, I believe. Yeah, credit services. Country USA, that's good. We want all USA trades. Now, American Airlines having a volume of 30 million. Holy moly, that's a lot. But SoFi also has 31 million. Open, I'm going to have to take a look at that, is a real estate company, 25 million for volume. So she's really pushing up there. So we'll look at a back test on Sophie, Open, and American Airlines. Maybe just Open. We'll look at Sophie another time. Open and American Airlines. So just swipe up. The heck? Trading View. American Airlines, and what else? I say Open. So AAL, which I have American Airlines already. I'll just type in Open. Okay, type in, we got Open here. Now we're just going to zoom this down, looking at the 4-hourly time frame. So there's no way I'm cheating. I do this with every chart. I show you guys that I can backtest and do all this good stuff and nonsense. You're going to go to, it might be different from my phone to yours, so this will not work if you try to do this. Looking at October 2020. Then I'm going to go back again. Oh, it looks like we can't go back. It looks like it was made, the stock was made around June 18th, 2020. So go to settings here, reset price scale. Oh my God, look at that. Unhealthy freaking trade volume that does. That's crazy. Did so many pumps to the upside, created an area of this volume liquidity, and then dropped down, created lower lows, created more liquidity, jumped to the upside to catch this area right here. And I always say this in all my videos, that where there's liquidity, banks will always come back and grab. And that's what she did. So also looking at this, major divergence. Jesus, look at that. That is insane. Let's see. Take my Fibonacci retracement. Take the lowest on price. Go up to liquidity levels of the divergence. Okay. Just like that. Go back to cross. Just like this. Price coming down, making her lift off the 889, 76 levels to push up Hit first TP at 50%, came back up 25, 0%, went up, hit an area of reversal before the 618 appeared to go up. Man, this is insane. Who is that? We're just gonna... Okay, don't need that. Look at this crazy stuff, man. Buy, lower lows, higher highs, lower lows, higher highs. And then I'm gonna click. I'm not even sure what time frame I'm even on, so we're gonna go on the daily time frame. Because daily, weekly, and all that shows me a whole lot more. Okay. Let's make another box down here. So rectangle this. There's liquidity down here, but she makes higher highs, lower lows. Come down here. Now something happened here on the daily. So going back here, go to the 1 hour time frame. All right, rejections. Cool. So we can anticipate her to come down and place a short position. What the heck? I hate Android. Take a short position. Come on. Right here for this would be an option in the past that you would want to do. Take this, go across. For some reason, I gotta go across every single time, and I would place a Fibonacci here so I don't confuse you guys. So I usually just do it in my mind from highs to lows. And why would I place a Fibonacci to the downside on this? Because there's an area on the smaller time frames where there is a divergence. So I've done divergence for like a long time, and I see it. So it's just kind of hard to explain. I'll explain it another time when I'm actually showing what a divergence is in the eyes of a retailer. Okay, so let's see. I gotta zoom out more. 50%. Okay, so if she comes down, 1963.27 and 618 is an area reversal, but I want to see her come down all the way to about 1450. Oh wait, before I do that, I want her to come down within a 3-month time frame. So go back to the hour. Let's go back to 4 hour. Let me see, 1, 2. I'd say about till 1 month. Yeah, 1 month. So 3 weeks as our expiration date would be 31st. So around that time, okay. Come down here. First TP will hit at 1963. That would be your strike price if you were doing options, or about $20, which like on most places, brokers like Robinhood would have to be a whole number, $20. So if you had a call sell or a call put, you're betting for price to go down within a month, okay? And you don't want your strike price to be at 20. You want it to be at, if it's at 22 right now, you want it to be at 21. All right, and break even will be 20. Okay, because you want price to come down all the way to 1963, 1884, 17, and so on within 1 month time frame. Because if it keeps pushing down, I believe once it goes past your call put, you get your money. So I'm always selling before the expiration date, always, just to get that first TP. Okay, so boom, just like I said. All right, 1 month, and we were right here at, what is this, 12th of October. She came back up, she came back down. I said 1 month, your first TP would be at $20, which is at the $19.63, but if it's on like Robinhood or Webull, they're gonna do whole numbers, so your strike price would have to be anything above $20. So 20 or 21 would be great, but the closer you want, like let's say like earlier whenever we were doing this, the price is at $23.92. Okay, the closer your strike price is to the price, the more expensive it's gonna be. So, being in a 1 month time frame, the price would have probably been double. So like 500, or if it's $200 for the stock price, it'd been like $200 plus, times that two, multiplied. It'd be a $400 stock call put to play, to buy down. And we hit it to the T because we just did that. So this is what I do. I practice back testing, and then I implement it on my own. I mean, I did it with Kraft. I did it with Jack Henry. I did it with Snapchat. I did it with HPE. I did it with Bank of America. I did it on JP Morgan. I shorted all of them. Okay, well, I think I did a buy call for HPE. I shorted Snapchat, JP Morgan, Jack Henry Associates, Kraft Heinz Company. Yeah. We did it all. Here I'll show Kraft. So let's go here. KHC. And boom. This is all this was on my LinkedIn page, and I know some of you guys are on my LinkedIn page, but before the drop even happened, I've been calling it out, saying first TB up here at 36, another one at 36, another one at 35, and I said I wanted her to drop about $3. So we were currently up here at 38, and then I wanted her to drop about $3. She came down exactly to the T of $35 and stopped, 34.80. And that's just where I've seen the market. So I still see her coming back down, but that's going to be a longer call. Kraft's going to go to shit just for a little bit. We're not talking about just Kraft cheese. We're talking about all Kraft Heinz. That's why I keep calling shit out on like the U.S. dollar. We're not even in inflation yet. People are panicking like crazy. Which you should be panicking regardless. But yeah, So God or great. What am I talking about? America would never be great again. So, all right. Thanks for looking at my video. Peace out.